Three, two, one. Hello, and welcome to another episode of the Capital Gains Tax Solutions podcast, also streamed on Expert CRR Secrets podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit highly appreciated cryptocurrency, businesses, real estate, NFTs, any artwork, collectibles, anything that has millions of dollars of tax. We're here to help you using something called a Deferred Sales Trust. Hey, I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, wealth, and cryptocurrency minds in the world, where they share their ideas, deal stories, and inspirations, so together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He's out of the great state of New York in Manhattan. In fact, he is the founder and managing principal of Tech Meets Trader, which invests in and venture build top tier startups. He's a venture partner at Blockchain Founders Fund and sits on the board of directors at CryptoStar Corp. He is the previous managing director of the trading operations at Alphavai Exchange and was a licensed investment advisor at Northwestern Mutual, and so much more. Please welcome to the show with me, Warren Lorez. Warren, how you doing, sir?
I'm doing well, Brett. Thanks for having me today.
And for our listeners, get to know you for the first time, would you give us a little bit more about your story and your current focus?
Sure. So my name is Warren Lorenz. I run a business called Tech Meets Trader. We have 3 business units here. We have a consulting business that launches everything from tokens and staking, NFT projects, DAOs, you name it. We're kind of in the thick of it. We have 2 investment businesses as well. We have a venture capital fund and a hedge fund. We've been in the business since 2015, and albeit not always in cryptocurrency. We historically were building automated trading systems for hedge funds, prop shops, family offices, and things of that nature. Before that, I was a licensed investment advisor, had a couple exits, and I was just an entrepreneur.
Awesome, Warren. And for our listeners, even to get to know you a little bit more before we dive into the topic at hand today, which is navigating volatile cryptocurrency. We've seen some crazy changes in the past 90 days with cryptocurrency, and we're going to be talking about how Warren's top secrets and how his company, his team are helping investors to navigate volatile cryptocurrency movements. But before we get there, Warren, I want to take one other step back. I believe we've all been given certain gifts in this life, and the gifts have been given to us to be a blessing, help to others. Some people call them strengths, some people call them superpowers. I'm curious, what are those 1 or 2 gifts that you believe you were given, and how does it help how you help and bless people today?
So the first one would be connecting with people. I think just genuine relationships has been a gift I've been able to embody, and those relationships have allowed us to gain meaningful edges throughout the relationship or throughout the industry and professional experiences. And another one I would say would be responsibility and ethics, right? We're very transparent with how we operate, both with our clients, our investors, and I think that that's kind of paramount for success. So if you're operating with integrity, it's obviously crucial, especially when you're in financial services.
Excellent. Perfect, Warren. We got connecting with people as a gift. It's a great gift. And then having high integrity and ethics and responsibility and transparency. Wonderful. So let's dive right into the topic at hand, navigating volatile cryptocurrency. So Warren, what's the number 1 secret to trying to build wealth during changing times?
It's interesting. It's about building an edge and managing your risk. And ultimately, you can have to compartmentalize both opportunities. The managing risk component, as you're seeing right now with markets drawing back, is at this point, right? If you weren't managing your risk, that's kind of, you've seen the byproducts of that. Whereas in the opportunity aspect, and you lean into your edges, for us, our edges include, venture capital agreements with early stage startups. So we're supporting entrepreneurs from their seeds, to family and friends rounds, even pre-Series A typically. And, you get an edge because you have an asymmetric risk reward profile, right? Of course, that every company that you're involved with is not going to become next Facebook, but nonetheless, it's an asymmetric return profile that works well. Another one is in terms of managing risk, but also extracting opportunity would be like what we're doing with our hedge funds. We have a arbitrage and lending fund mandate, which means that we do not take directional risk. And that sounds interesting for most listeners, I'm sure, but If you could essentially buy any asset, in this instance, let's call it Bitcoin, for $100 and then sell it for, let's call it $101 simultaneously via computer algorithm, you'd want to do that, right, frequently. And so we have computer systems that are doing that all day across the markets. And, so that's built us an edge. So ultimately, I would say it's obviously risk management and, establishing your edge, which is really the most paramount key to success in any investment markets, regardless of sector.
Okay, let me see if I got that. That was a lot there, and that was really good. So, building an edge and managing your risk, and edges could be something such as, venture capital into some startups that have a asymmetrical opportunity to grow your wealth, right?
Right.
I think I heard that. And then the other thing could be the technology behind automating computer tech robots that are trading Bitcoin higher and lower on automatically. Is that a fair summary so far?
Sure. I mean, it doesn't have to be computers. I think thematically, it's, find something that fits your personality, right? For me, I didn't want to go play cowboy. If you are more of a risk on individual, you can gain an edge being risk on as well. But it's just, you need to know that about yourself and your own profile in order to figure out what strategy might work best for you and what you're trying to achieve. If you're trying to achieve a 15 to 20% return, that's a lot different of a risk profile than if you're trying to get a 10x multiple.
Excellent. Very well said. And how has being a financial advisor and then moving into the cryptocurrency space position you and how you help your clients, customers, institutional investors grow wealth in the crypto space?
It's a great question. I think seeing traditional products in across traditional industries has been it's kind of foreshadowed a lot of what we've seen through the cryptocurrency markets. Everything from the spawning of derivative contracts to lending markets and things of that. We've in crypto essentially mirrored historical financial systems, just with a different technical infrastructure. So seeing what has happened in history allows us to really understand where the kind of puck is going, if you will.
Excellent. So we've seen some really crazy volatility in the cryptocurrency market the past, 90 or so days.
Right.
Bitcoin's trading about 19,362 today. I think with the high was like $69,000 within the last year. And so what are your thoughts on the state of Bitcoin, Ethereum, maybe some of the major coins, and what are you doing today to help to protect or hedge and or invest, maybe buy low while things are low?
Right. No, that's a great question, Brett. And ultimately, I would say today is the time where everything is depressed, right? And for those who are already in the market, now is not the time to panic. Now is the time, if you can, to hold tight. And, in some instances, if you have strong conviction, you add and you average down. And other ones, you need to know what you own. Right. And so for the losers that you do not feel confident in, you're going to want to cut your portfolio, and obviously be able to reallocate just from a mental perspective. So as you're moving forward in this market and you're thinking, what lies ahead, right? We saw massive liquidations. Where's the opportunity lie? Look where people are using the technology, where there's users, where there's transactions. That's where, if there's smoke, there's fire. The consistent Bitcoins and Ethereums, we have millions and millions of users. They're not going anywhere. What we saw were large institutions get liquidated at scale, which brought the market down meaningfully very fast. So it's a great opportunity for longer term investors at the moment to start allocating or adding to their existing positions.
Okay, make sure I got that. That was amazing, by the way. Great job. So today everything is depressed. Now is not the time to. Now is the time to hold tight if you have that certainty of conviction for the long-term utility of certain coins such as Bitcoin and Ethereum. Know what you own, whether or not there's utility and people are using it versus just maybe speculation on some of these altcoins. And I think that certainty of conviction can't be overstated, right? Because that's with anything, whether it be real estate, whether it be stocks, bonds, mutual funds, whether it be Bitcoin or cryptocurrency. It's that certainty of conviction which helps you to make wise decisions. So, Warren, what are some of the things that have helped you to become stronger at recognizing what is conviction for you and building on that certainty versus what is the speculation or the things that are distractions?
You know, Brett, that's a great question because I would say for me, it was looking behind closed doors on Wall Street, going down to the investment banks, talking to and seeing and working on with them with some of their deals and seeing the institutional appetite for blockchain-based technologies. That just spawns so much conviction inside of me personally, because that the big players want in. They're just trying to figure out how and what the best way that can fit within their mandates, right? All these asset managers and the like have mandates that they have to follow. And it's very, very interesting to see how they're trying to dance around within certain confines to be able to allocate to this new sector within their existing fund mandates. So I get a lot of conviction, not only from the institutional side, but on the retail side as well. There is mass adoption coming into various aspects of the industry, such as blockchain-based gaming, decentralized finance, infrastructure-like plays that are, kind of Web 2.0 technologies. So there's a lot going on across the industry that is, depending on what your passion is, I bet you'll find within crypto some component of innovation within the technology.
Excellent. And yeah, you're Manhattan. You get to go to Wall Street, right? And so you're actually seeing, touching, feeling, being with those that are in the industry. So you get to get the sense of that institutional appetite for things like blockchain. So that makes sense. It's kind of like if you go to, you're going to a real estate property and you want to know if it's in a good location. What are the schools like? What's the traffic counts? What's the renter sentiment? Like, what's the feel? If you're buying that, you're going to get some conviction that, oh yeah, this is a great place to live for all these reasons. Is that a fair summary of what you're saying on blockchain and cryptocurrency?
That's right. It's following the smart money, if you will, right? And that's kind of what you have to do from your as a smaller investor, right? Unless you're a pension fund, an endowment fund, a multi-strategy hedge fund that's on Wall Street, you're probably not big enough to move the markets, right? And so when those market movers do come in, you obviously want to align yourself with that inflow.
So now let's focus on tech meets trader and exactly how you're doing this, because you kind of teased on it before, like, yeah, you bought Bitcoin at $100 and then it goes to 101. So walk us through just step by step, like if someone wants to invest with you, A, they need to be credit investors, B, is it traditional retail? Like, what does this kind of look like? Give us kind of a feel for how you guys navigate it when things were going haywire. I mean, were you hedged and protected? Were there put options? Were there certain things where you guys were there? Walk us through just the whole thing of what you guys offer.
Yeah, so we have a hedge fund that's market neutral and arbitrage focused. That is a more conservative vehicle that we offer. It is not directional based. It's simply when there's disjunctions in the market, our trading systems, we take advantage of it. And same with our lending opportunities. Very, very kind of vanilla traditional feeling. Now, the venture capital component is a little bit more exciting for those who are more risk on. We get into early stage blockchain-based companies. We have a portfolio of over 20, I think there's 24 companies at the moment, with a couple on the finishing line at the moment right now. And, we get in everywhere from a $5 million valuation to $25 million valuation. And we've had companies get acquired for $3.5 billion valuations. So, there's proof in the concept from historical fund perspectives, and we're looking forward to scaling both of those in the future.
Excellent. You got to be accredited investors to get in some of those hedge funds, or how are those available to? What's the minimum investment kind of thing?
That's correct. It is for accredited investors. Minimum investments as of right now are $250,000, and obviously there's different fund terms depending on lockups and sizing and checks and whatnot, just like any other hedge fund or venture capital firm.
This is very cool. I love all this. What else about Text meets radar that I haven't asked that I should be asking, my audience might be interested in?
That's a good question, Brett. I think we've covered a lot. I would say that what we haven't discussed is my line is always open for people who are looking through innovative ideas. Maybe they have a GitHub repository that they've been building. They're not sure if it's a commercially viable product, but they're potentially interested in bringing it to market. Reach out to us. We're very interested in partnering with very smart entrepreneurs who are building the next great thing. And Also for people who are just looking to get into the industry and say, hey, I'm an established accredited investor. Perhaps it's not with you, but could you point me in the direction of X, Y, and Z? And I'm happy to help.
Amazing. Now let's shift a little bit, Warren, to, by the way, you can learn more about Warren Lorez at techmeetsradar.com. That's techmeetstrader.com. Techmeetstrader, not radar. Techmeetstrader.com. I'm thinking of that, some other one. Propertyradar.com, right? Which is not this. Okay, techmeetstrader.com. Okay, but I want to switch into, what I like to say is tax flow versus cash flow, right? So most of us are focused on cash flow and acquiring and appreciation, but sometimes the tax flow gets left behind, and the tax flow has to do with when you exit highly appreciated cryptocurrency. And I'll give you an example. We had a client, she exited $5 million of Bitcoin, and her target price was $54,000 a coin. Now, she had bought this coin at about $50,000 to $100,000 of an investment, and it went to $50 million at $54,000 a coin. And so she exited the first $5 million. Now, the challenge was she had a $2 million, about $1.85 million tax. She worked for a big tech company out of Silicon Valley, and she's like, Brett, I have never sold my Bitcoin, partly because I didn't have a good business to go into, but number two, because of the capital gains tax. Like it's just so huge. And so we worked with her. We did a deferred sales trust. We exited, and then she was able to invest into a tech startup company. Part of that was her dream to not have to work for the big tech company anymore. All tax deferred, right? And so I'm curious, like what have you seen as the biggest frustration for people that wanted to exit crypto high, and when it comes to capital gains tax, but maybe not having a good solution?
I think overall it's a great question, because for those types of stories, and I know quite a few folks that have done that themselves. What they did was actually borrow against their crypto assets. That worked really, really well with them for a long time, where they would, deposit, and it still does, depending on the counterparty. Of course, as you're seeing in crypto, there's a lot of defaults and bankruptcies going on within the lending ecosystem, if you will. But if you were a depositor, and let's say you took a very high loan to value because you wanted to protect your downside, it was, a lot of people were protecting themselves because it's debt, and you could repay that loan. In the instance of it going up, you still retain that value. But if it went down, you would get liquidated at maybe like a 15 or 20% drawback, whatever parameter you would set. And then that would be a graceful way for you to exit, if you will, because that you're defaulting on the actual collateral, but you still have the remnants of the loan.
Yeah, and so a case in point, right? So it went to 54,000. She exited 5 million, and then it went to 60,000. I called her up and said, "Hey, you're at that point. Her 50 million is at 45 because 5 was in the DST. Her 45 now had gone up. Then it went to 65,000 a coin. I said, "Hey, you want to sell more?" And then it went to 68,000 a coin, and she said, "No, I'm going to wait." And I'm like, "Okay." And then now, as we know, it's at 19,000 a coin. But to I guess maybe hit the ball back to you on this one, like. The whole point of exiting is because you think it's a good time to exit. And if you're just borrowing against, and then obviously the market has gone down to where it's at, and you get a margin call, and now you're out, right? I mean, that's the part where for us, we want to sell high and buy low. We don't want to be stuck in a marketplace, even in real estate too, right? It's like this 1031 exchange thing where you sell high and buy higher 180 days later. We like to practice optimal timing, and to the best of our ability, exit tax defer when it makes sense. So I'm wondering how many people are kicking themselves going, wow, I wish I wouldn't have, borrowed against, because now I'm losing it.
Yeah, no. And that's, well, if you're selling the asset as well, right? If you sold it all at 68, you would have, you wouldn't have the custody of that assets either. But I completely agree with you. I mean, it's really interesting on those types of tax liabilities even that are created subsequently, because in some instances, people are swapping them for other assets instead of not cash. They swap them in for Ethereum, and Ethereum may go down in value subsequently. And then, now you're really stuck because you have that, transaction task from swapping from Bitcoin to Ethereum, but then you don't have that residual value to go and pay that additional tax. So it's, you get hit even harder.
If people want to learn more about that, we have actually a solution for that. You can go to capitalgainstaxsolutions.com, and what we do is we actually transfer the coin to an LLC prior to swapping it back to ETH. And then from there, we exit the ETH back into cash and we defer all the tax.
Nice.
And we use an installment sale. It's based upon IRC 453, where it's actually similar to what you were talking about before, you're borrowing against, except this time we actually have a third-party buyer that's going to buy the position from the trust, and the ultimate seller of the coin or the ETH or whatever you swapped into that, you get a promissory note, but you don't take any of the cash up front, and therefore it's in the deferral state. It's actually a really elegant, beautiful way to exit. We did it for another Ethereum client. He and his wife, they lived in the East Bay, not too far from San Francisco, and they had $100,000 of Ethereum, and it went to as high as 13.5 million. Now, this wasn't, it took many years, but all the ups and downs and crashes, and they were able to exit 7.5 million of ETH, basically 3,000 a coin and about $3,800 a coin, and defer all the tax. Obviously, they're happy now because I think ETH is around 1,200 a coin. And all tax.
Like your clients are very happy as a whole. You keep telling them to sell when it's high. Sheesh.
That's the whole point. We're like preaching from the top of the lungs, right? We're like, oh my gosh, we got to help people understand that how to do this, right? And so we've done it. It's been proven. But that being said, estate tax is another thing that most people don't take aware of. And I know you're aware of this, Warren. Like as soon as you're a billionaire or even greater than 22 million, everything is subject to a estate tax to be 40% death tax if you're married, 12 million single. But what are your strategies for people when it comes to estate tax, Warren?
A lot of folks in crypto are setting up foundations, and trusts as well. And so, it's being managed through that. Quite frankly, we have an estate planner who's like putting together a whole plan at the moment right now. So that's an active conversation that is if you have a good solution, I'm all ears.
We actually do, Warren. So it's called the Deferred Sales Trust Plus, right? So one single day you can move your funds outside your taxable estate, but it takes a sale of something, right? So it needs to be a sale of a real estate or a business to a third-party buyer. But the funds can get outside the taxable estate. No charity, no gifting, required. No life insurance required. But just a sale of something. And so that's the other part, because $32 trillion, Warren, baby boomers, right? Going to pass it all to us, right? In the next 20 or so years. It's the largest wealth transfer in the history of the planet. And a lot of this is tied to high-end primary homes, businesses, commercial real estate, now also cryptocurrency. And the question is, will it be subject to the 40% death tax or not? And again, you can use the Deferred Sales Trust Plus to eliminate that estate tax by moving funds outside your taxable estate. And one day, one transaction, you can go to capitalgainstaxsolutions.com. What do you think about that, Warren?
I'm here for it. Let's do it.
That being said, we're going to move to the lightning round. Are you ready?
Sure am.
All right. Knowing what you know now, Warren, if you go back to your 20-year-old self, what's the one golden nugget you make sure to tell yourself to do?
Get my Bitcoin off Mt. Gox.
Perfect. What's the number one book you've recommended the most in the past year?
Good question. I would say From Good to Great by, who's it by?
Jim Collins, I think, right?
Jim Collins, that's right. Yep.
Question 3, what's the number one leadership quote or theme that you strive to live by?
Oh, man. Lightning round. The road to success is always under construction.
I like that. Next question. What are you most curious about right now?
Whether or not our counterparties in crypto are going to default. You're like, oh man, who's going on in the industry? You're looking at everyone just like everyone's looking at each other. So it's an interesting time.
Absolutely. We're gonna have you back on to hear the outcome of all that. When do you think you might know that? Do you think it's it's like the Warren Buffett, right? Everyone has a plan, or you see who's been skinny dipping once the tide rolls out, right?
That's right.
So what do you think? 30, 60, 90, 9 months? How long is it going to take to kind of get a feel for that?
I think we're about 60 to 90 days out before the liquidations throughout the industry are over. And then, you're kind of back to business as usual. But until then, it's, hyper vigilance. So.
Absolutely. So fascinating. Last question. Warren, after all your success, building the business you've built and helping the people you've helped, how do you stay centered in your values, and how do you stay encouraged to charge forward to reach new heights?
I would say helping people and uplifting and providing opportunity. That's really what I kind of surround myself around, and kind of what my purpose is trying to help people in different facets, whether it's helping a startup or a company, employ more folks and grow, or if it's internal team members, helping uplift them and providing them more opportunity. I really, really enjoy that.
Amazing. Hey, Warren Larez, I want to thank you for being on the show. I want to thank you for using your gifts of connecting with people and being responsible and having high ethics and transparency to help people with their investing in a volatile cryptocurrency marketplace and with startups and helping being venture capital for groups that want to grow their company. Amazing what you're doing. If I ever get back to Manhattan, I'm going to come in October. We can hang out if you're around. And that being said, for any of our listeners who want to get in touch with you, would you remind them one last time what's the best place for them to find you?
You can find me on techbeatstrader.com, and you can find me on TechBeatStrader Twitter as well.
Amazing. Thanks so much. I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan can cost you a lot, right? Especially if Bitcoin was at a high of 69,000 and you wanted to exit, but you had that tax that was holding you back. And you can now use a deferred sales trust to defer hundreds of thousands to millions of dollars of tax. You just have to have a plan and a professional to help you to accomplish this exit plan. And that's what we do here at Capital Gains Tax Solutions. Also works for estate tax. You can go to capitalgainstaxsolutions.com to learn more. Check out the new book, by the way. We got it coming out here soon. We got some really smart people in the book. It's not just me. I'm probably the lower of the smarts in this sense, because I'm surrounding myself with some really smart people. We have people like Kevin Harrington from Shark Tank in the book, and it's called Building a Tax Deferred Exit Strategy. And it's all about unlocking your ideal wealth plan when selling assets of any kind for yourself or your clients. Look for that on Amazon in about 30 days. And please rate, review, subscribe. Please share this with someone it could be inspiring to, as well as it can help them to navigate their wealth in all things crypto and really anything for